What is a tax lien state? In this video, I'm going to show you exactly what that means for you and I and how we can possibly make money at this. Okay, understanding the difference between a tax lien and a tax deed state is crucial. And in this video, I'm going to show you exactly what you're looking for. And stick around to the very end. I'm going to show you, once you learn what a tax lien state is, how you and your family can level up and financially take advantage of this immediately. Okay, we're not talking about next year. We're talking about right now. So what is a tax lien state? Let me give you the differentiation. We've got 50 states plus Guam, Puerto Rico, and the U.S. Virgin Islands, okay? Every single state in the United States offers some form of a tax lien or a tax deed. So let's differentiate between those two things. First of all, let's go back to the very beginning. Why are tax liens here? Okay, it's the only way the county is going to be able to get their much needed funds to run their whole operation. So you need to understand this. This is crucial because how they got there is a big difference, because people are, oh, all we're doing is buying properties. No, you're not. You're helping the county. Number one, the only way counties get money anywhere in the United States is through property taxes. Well, there's other things, but 99.9% of all their money comes from revenue from the property taxes. Without property taxes, things cease to exist. Things like education. 55% of education comes from property taxes. Then you've got police departments, emergency services like fire departments. You've got ambulance, city colleges, parks and recs, summer camps. I mean, it goes on and on and on. County's got these things. And the beautiful thing about it is we've got a really good system here. Okay, so when we formed our states individually, we just kind of mirrored it. So as we progressed from the East Coast to the West Coast, they kind of looked around and said, okay, who's doing what? We got to figure out this property tax. In our state statutes, it's going to say, if somebody fails to pay their property taxes for one straight year, we have the opportunity to collect that money through a tax lien sale. We're not selling the house. Nobody's selling a house. All we're saying is we kind of need our money. So what we'll do is we're going to sell the lien, which means the investor, that's me and you, can come up there and give the money to the county. Now, you are not causing anything to happen that hasn't happened already. The property owner already owed that money. The county's just saying, we got this money sitting over here that we're not collecting. We're going to charge the property owner anywhere from 14, 16, 18, 25, even 36% for being late. But we don't want that money. We don't run our things. So we're going to go ahead and let somebody like Sean come in there. I give the money to the county. They give me a certificate. It goes on file down at the county courthouse. It is a legal document. Only in this case, it's going to bear an interest rate, and we're going to use 18%. And let's say it's a $300,000 property. So I put the taxes up. No big deal. Property owner, nothing happens. The property's like, oh my gosh, somebody's bought a lien. No. It doesn't matter. If the county has it or I have it, it's still the same dollar amount. So I didn't cause anything to happen. Okay, all I'm doing is going, I'll give you the money, and when they pay you, I get the benefit. So they have what they call a grace period, or actually the legal term, you want to write this down, is called a redemption period. Now that redemption period can be as little as 6 months on the low side up to, 3 years on the high side. And what the county says, or what the state law says, is that once you're delinquent on the property taxes, you have X amount of time to pay that off. In this example, hypothetically, let's say it's 2 years. So I put the money up, and the county says, okay, let's start the clock right now. And the property owner has exactly 2 years to pay this off. During that 2-year period of time, they can come in anytime they want, when they're darn good and ready, and pay the county, not me. I'm not dealing with the property owner. They pay the county. See, the property taxes are still owed to the county. The county's just using my money to run the county, and when it's paid to them by the property owner, they just kind of forward it over to me within 5 to 10 business days. I'm happy. But if the property owner doesn't come in within that 2-year period of time in this example, I can go, okay, now enough's enough. Okay, they have been delinquent on their property taxes for 1 year before I bought it, another 2 years after. That's a total of 3 years. Now it's time to go ahead and foreclose on this property. So what do? I call my workhorse. I call the county. I say, county, hey, property owners failed to pay off the property taxes, and I would like to get my money back. Enough is enough. The county says, you're right, enough's enough. It says it right here in the law that you have the right to foreclose on the property. So the county or a legal department starts the foreclosure process for me. Now, this may cost something. It could be anywhere from $500 on the low side up to, I don't know, a couple $1,000s on the high side, maybe $3 at the most. Depends on the complexity, okay? So really, but this becomes part of the total. So let's say I paid, I don't know, $2,000 in taxes, then I paid another $1,000 to foreclose on it. The property owner is now responsible for all $3,000 plus whatever prevailing interest rate is being issued in that particular area. Okay, now remember, the underlying value of the property is my safety net. Okay, so I'm getting 18% on my money. Okay, all the notifications are going out to the property or to the lien holders during that 60-day windows of, hey, everybody, this property is going to be foreclosed on and the new owner is going to own it. You're no longer going to have legal security of that property for any loans that you've created on that property. So everybody's going, oh no, we got to get in there and pay it. So when they go down and pay those taxes off, plus the interest rate, I get that money, plus the fees. So if there's attorney's fees on, they got to pay those also. Everybody wins. Property owner got 3 years bide time. The county got their money before the 3 years it came up. I won because I got the 18%. Everybody wins. Okay. Now, if they don't come in, make no mistake about it, I will get the property free and clear of all liens and encumbrances, okay? So in other words, in this example, like I said, I get $300,000 for a couple of years in back taxes. So, but let's get real. Do you think a property owner is going to let a $300,000 property disappear for a couple of years in back taxes? Probably not. They're going to go down. They're going to figure out some way, somehow to pay those off. Who cares? Okay, I get my money back plus the interest rate. But if they don't, make no mistake, I will wipe out all liens and encumbrances, again, including the mortgage. So let's say that that's happening. Let's say I'm going into foreclosure. I have to notify you. I can't sneak up on the mortgage. So I'm saying, hey, Mr. Bank, we're foreclosing on this property. Bank gets a certified letter in the mail. That means they have to sign for it. They says, hey, the property owner is being foreclosed on due to delinquent property taxes. Wait a second. We know how this works. We're going to get wiped out. Call the property owner. Property owner, what's going on here? Oh, I'm on vacation. I forgot. I don't have the money. Whatever the case is, what do you think the property or the mortgage company is going to do to protect their situation? Darn right. They'll go in and pay off the property taxes plus the interest rate. That's a cheap price to pay to protect a multi-$100,000 mortgage or whatever it is, right? So now that they've covered, you're covered, everybody's covered. But let's be clear. If the bank doesn't come in, if anybody, Aunt Sally doesn't come in to stop the foreclosure, and the way they stop the foreclosure is to pay the delinquent taxes plus whatever the prevailing interest rate, you will get the property and we will own it free and clear of all liens and encumbrances, including a mortgage. Now, would you call that a good deal? Absolutely. Now, what a lot of people are asking me all the time is, Sean, what if I don't want the property? If I don't want the property, what do I do then? Well, if you don't want the property on that, just let your lien roll and somebody else will come in and foreclose on it. Yeah, you'll still get the 18%. So even if somebody comes in behind you and forecloses for tax liens, the one thing you're not going to get to eliminate is county owed taxes, right? They're not going to eliminate themselves. So it doesn't matter. You say, Sean, I just want the big fat checks. Then that's what you do. Some of you invariably say, you know what? I want to get the property. That's what the big money is. And I can show you how to get a property free and clear every single time promised, okay? This is what you want to do. If you want to level up financially for you and your family, I've got a brand new course I just put together for free. Gosh, the price is right. Okay, it goes into extensive detail on how you do this from A to Z. How to find the counties that allow this, how to find the list of properties, how to evaluate the properties before you put your hand up and say, I want to buy this. Okay, what kind of monies do they need? all of these things to walk you step by step to your very first successful deal in the next 30 to 60 days. So click on the link down below, higginsmethod.com, and we'll show you how to make that happen, and we'll see you on the other side. God bless and good luck.